Hello and welcome to another episode of Pause for Payments. I'm Kristy Duncan and I'm really excited to have with me today Jane Loginova, co-founder of Radar Payments and also Chief Commercial Officer at BPC Banking Technology. Jane is based in London. Welcome, Jane.
Hi, thanks so much for the introduction and for the opportunity to be here.
It is going to be fun. We're going to talk today about the very cool things that Jane's been doing at Radar Payments and get her insider views on how challenger banks can rise above the competition to become profitable. So let's get started. The world of payments and finance is in a moment of tremendous disruption, and new entrants will need to prove that they can be profit-making ultimately. And this is especially true for the digital banks, which are a combination of payments and technology. Jane, to give us some context here for this discussion, can you tell the audience about Radar Payments and BBC Banking Technology and their role in the payments markets?
Yeah, absolutely. So we have been in payments solutions space for over 25 years. BPC, standing for Banking, Payments and Commerce, is the payments technology firm supplying software solutions to any customers whose business touches payments. So predominantly it's banks, and we serve top tier banks like HSBC. We also serve smaller microfinance banks in Asia. And we also serve the new breed of banks, which are the neobanks or the digital banks. But as payments over the last years have also moved outside of just pure banking and financial industry space, so have our clients also, expanded. Telcos, transportation companies, where you need to pay for your for the ticket. Governments, central banks. So yes, I would say we do business with anybody who has a payment, whose business is payments. So we are B2B, and Radar Payments is our startup within the group. And the reason why we differentiate that is that all of the know-how and all of the technology that we have been selling over the years for customers' use on their premises, so as a software, now we offer in the cloud as a service. And in the current environment where, again, if we look at the fintechs, the neobanks and the startups, everybody wants quick scalability and access to the best tools available to them instantly. But the same tools that can support bigger volumes as those startups grow. We thought that our technology, which has been proven on very large volumes, is resilient, secure. Why not share it in a more accessible manner to everybody who is not in a position to either invest into managing their own tech stack, or also just starting up and has a big ambition, but not yet a big, wallet. And actually, this is something that I always say, if you're an investor, VC funded organizations, spend that on your go-to-market strategy, or like why you're kind of different to the others and why you're relevant to your customer base, and let the professionals take care, have your back for the payments technology. So our motto is that we're staying under the radar of our clients so that they, can really roll off the latest that there is in the tech stack. In payments.
Wow, that's fantastic. So you've been in business for a long time, and it has been under the radar because I've never heard of you, but clearly I'm not in those markets.
Yeah, we're not really present in North America, so we are mostly present in what's commonly known as emerging markets. So that's Southeast Asia, Middle East, Africa, Eastern Europe, Latin America, purely because, as a paradox would have it, the latest kind of innovation in financial technology and in payments just started happening there earlier than it has kind of caught up in Western Europe and America, because obviously those markets, they leapfrogged a lot of the stages that obviously in developed world, those economies went through step by step.
Yeah, no, this opportunity to leapfrog has really benefited them. The digital space, Jane, is already full of a lot of popular fintechs like Monzo, Starling, N26, Revolut, and it's getting even more competitive with the heavyweights entering the arena. Some of the traditional banks are finally catching up with their digital banking propositions, such as Bo by RBS, which may or may not still be alive, Marcus by Goldman Sachs, and even some of the tech giants, the Googles, are going to be making an entry into this space this year with Google Plex checking account, as well as more niche digital providers like Go2Bank, which is a challenger bank aimed at low to middle income consumers. So the lines are getting more and more blurred, again, with online payments and commerce platforms like Shopify and Stripe, plus fintechs like TransferWise. Do you think there's going to be space for all of these players to become and remain relevant over time? And how do you think they're going to change the face of banking for consumers?
Yeah, look, I'll be quite blunt, but in my personal opinion, the short answer to your question is no, there isn't space for all of them. But that said, there are a lot of, the market is still vast. And the players that are currently present, the ones that have been the first ones in, the first wave, the second wave, then the big tech guys, they just need to be, all those players, they need to be crystal clear right now on what their strategy is. And if previously, the new entrants were all about better customer experience, because this is really the only thing that's a killer for traditional banks, is sort of, we, in a way, I don't want to say love to hate them. I mean, we have to live with them because, for obvious reasons of meeting our financial needs. But with the way the world has kind of moved in laser focus on the customer satisfaction, I think the traditional banks have been lagging behind on pure customer experience. So I remember being at, I think, Cybos in London, and at that time the ING CEO, who's no longer with them, but he said something that resonated, that the big banks were so focused for so long on meeting, the revenue requirements, the profitability ratios, that they kind of, the focus was not on the actual consumer, right? Because they sort of always assumed that, we have to bank, we will always show up. And so the new banks, obviously, they went for the easy and convenient customer service, which is ultimately what we're after. But they haven't managed to yet build the trust in their brand for us to move all of our, either savings or deposits, to do all of the banking with them, right? So we typically have more than one card, and now typically would have your HSBC card, and you're also like, say, a Monzo card, but still I would say the bigger proportion of people's wealth or monetary wealth would still be in the traditional banks, but the all the kind of transfers for travel, payments, they would try to allocate a portion that they would keep with, say, Monzo, and do it through them. And so, and because there are a lot of companies that kind of do that now, so there are lots of digital banks who kind of do the same thing, but a little bit differently. So I think there is space for those who really kind of service a particular niche. So be it either banks that are focused on migrants and who need to send kind of money back, and the ones who just arrived into the country and they have, you know, no credit history, no like utility bills to send to the bank for them to open accounts. So I think that, you know, that bank will do well. But I think really, if you don't have a niche, if you don't have a real kind of purpose other than great customer experience, I think those new entrants will struggle. But I personally would really watch the space of, you know, bigger traditional banks like Goldman Sachs and JP Morgan making a move into digital banking, purely because they are very smart. The kind of investment banking side of things have taught them to be precise, to be very focused on the consumer, also the speed of execution. And, you know, they have like a lot of, you know, super intelligent people working for them. So I think they, and obviously they have a bigger muscle in terms of the finance available to them. So I would really, you know, maybe because I used to work at Goldman, I do think that the Marcus is going to do well. I think JP Morgan is also gonna, you know, figure it out. I mean, they're talking more and more about it. They're making partnerships. I think they will basically handpick the best of the best, maybe do some acquisitions, but they will also learn the lessons that have been learned, considering that they're making a bigger, you know, a later entry into the arena. And the bigger guys like big tech, I would say yes, of course. Google is also, you know, the one to be feared. But in my personal view, I think the regulation will eventually come down on those guys. So I don't think they'll be able to also be the number one search, the only bank we have, and then sort of, and also have all our data. So, so here, again, going back to the original question of yours, I don't think there is space for everybody that's there now. And I don't think there is space for everybody that's popping up. But there will be space for those who really understand their business model, who they serve, how to serve them, and hence make money out of it. And I think also the bigger banks turning into, or rather not turning into, but offering a digital banking proposition are the ones to watch.
Yeah, it is interesting to watch the market as it evolves. And I was just speaking yesterday to someone from Australia who noted that they've already had two of the neobanks. One, Zinja Bank, has folded, and the other one, 86400, was acquired by one of the big banks, NAB, I believe.
Yeah,
Nationalism.
and that's the other issue, because also you look at some of the bigger digital banks that are there from the first to second wave in Europe in particular. And I think their problem is that they are too expensive to be acquired, so to speak, but they're also not yet making money for them to be economically self-sufficient. So they would need to, I don't know, they would need to figure it out. So sort of like, now that they have consumer, how can they really offer the services they can charge for? Because obviously in the beginning, if you recall, a lot of those banks, other than great and quick enrollment, they were also offering a lot of the services for free. But then, you know, it's also lasts only that long.
Well, and that takes me to my next question, because many of these neobanks have done a great job of getting new customers in the door.
Spent a lot of money on it.
Sorry?
And spent a lot of money doing that.
Yeah, so high cost of customer acquisition, but usually those customers don't make their accounts at the new neobanks their primary account. It's not the account that their payroll is going into. It's kind of a secondary account, their kind of play money, if you will. So they know very well how to lure in these new customers. But they're not so good at retaining them. And that, as you know, to your point, it's hard for them to become financially viable and solid. So what do you think is a secret sauce that these pay techs need to survive and to thrive?
Yeah, look, I think if we're talking about the pay techs, the startup ones, if we don't talk about the Marcuses of the world, I think I know I'll be repeating myself, but I think it will come to the really understanding their customer, but not, again, going beyond just customer experience, that the ease of opening an account, but really understanding what are their needs and trying to cover that. Because I think generally I think clue to success in these days twofold. You either go for huge customer base, and you just spend a lot of money upon its acquisition, and then just by doing traditional banking, trying to make money purely because of the sheer volume of your customers. But on the other hand, you either become an indispensable, so sort of that through your app or through your services, customer can really do everything that he needs, so sort of not just payments is a commodity these days, but also, I don't know, like savings, maybe partnership with some supermarkets, the loyalty schemes, just to become that a super app, if you will, through which all of the financial, and maybe not just financial, but say your utility payments, your even digital ID in some countries, they're kind of going that way. If that becomes, indispensable, I think that's going to be the way to make money. I think, again, it's not a bank, but I think the way that Shopify are doing their business, and that the way that Stripe is doing their business, where Shopify created the ecosystem for the merchants, where really all I just need to do is just have a good to sell, right? So, hi, I want to sell roses, but then, and again, like testament to the Canadian company, it's and they do everything for you. They do the storefront, they do the payments, they have the, I don't know, the warehouses. So the new generation digital bank has to kind of be like that. You need to really cover all the needs of the consumer. But all of that originally goes through also kind of through, they need to build the trust, because again, the original point is that, we do our payroll here, and then our savings are still in like brick and mortar bank. That's going to be the difficult.
Yeah, and to your point, I had dinner actually 2 or 3 years ago now with Rita Liu, who at the time was head of Alipay for Canada and was rolling out Alipay in Canada. And I made the mistake of calling Alipay a payment app. And she said, no, Alipay is a super lifestyle app. And
that's what it is. And sort of in China, you can't sort of you can't do anything without either Alipay or Tencent applications, right? And so that's the sort of a model that the Revoluts of the world need to pursue. But for that, they really need to understand the customer. So
then the other question in my mind is, where do you see the big techs? Google's now coming into this. They've launched Googleplex in the US just very recently. And, they've got the data on a huge swath of customers. How do you think they're going to fare? Will they be able to get the trust and then build those super lifestyle apps?
I think yes, as in obviously they have the means and they have the data. I think for the big companies like that big, it's also a little bit of the focus, because, they make so much revenue from the search, and then, Google is also doing well, still lagging behind others, but like banking a lot on the cloud. So if that becomes their, priority area, then yes. But I think it also going to be the fact that, okay, they will probably need to apply for certain, bit like a banking license, or some, and with all the kind of tension that there is right now about whether tech should be regulated, I kind of wonder if the financial regulators will be that keen to also give them out the banking license as well, because that's what I said, they will have all of our data. We will store all of our data in their cloud. They know everything that we buy. So I personally think it's just going to be a long shot for them also to become our bank. I mean, just because then you have one big super app across the world, and then what's the point for anybody else? But I think the banks have a good stab at that, as I said, because the JP Morgans and Goldmans of the world, they're focusing purely on banking. They had their share of being regulated out of them, so I think now they can slowly move into that space.
Yeah, and it's interesting that Google, when they did launch this product in the US, they partnered with a number of kind of more regional banks.
Yeah.
So clearly not interested or perhaps rebuffed by some of the larger banks, the Goldman Sachs and the JP Morgans.
Yeah, well, look, I mean, of course, on the surface, Googles of the world, they have, and obviously Amazon, you can do certain, there's a wallet there as well. They have everything to become the indispensable financial services supplier, but I do kind of want to firstly house that on the priority list, and whether the clouds of regulation are kind of hanging over them with that perspective.
Yeah, and it'll be difficult for them as well, because there's no one global regulator. So the service will have to look somewhat different in each market, which makes that customer experience a little more bumpy. This has been really interesting, Jane. I want to close by inviting you to do what I invite all of my guests to do, and that is share some of your career wisdom that you might offer to your younger self. And if you step back in your career just a few years, you've come so far in such a short time and done so well with Radar Payments and BPC Technologies. What would you tell yourself when you were 30 years old?
Oh, well, firstly, I would say that I'm definitely don't consider myself as the person who's done it well and quickly. But one of the first lessons I would probably or pieces of wisdom, I would tell myself that things take longer, things take time. Because again, I've come, to the job market in a very much of a, early 2000s, where it was just everything was so high paced, and I was coming with expectation, okay, you have great education, you have a great kind of place at work, and then it's just one straight line afterwards, which, but maybe it's just the illusions of the all youngsters. But things take time, and it's okay to take time, because I think also it's very easy to look around and kind of see other people doing well early or doing well quickly, or so it may seem. So you need to be sure on what you're doing, and always kind of question yourself, what is that, not necessarily what is your purpose, but if this is what you want to do, then just keep at it. It may take time, but it will eventually get there. And then there is no substitute for hard work. And probably lastly, but I've always been quite, I guess, lucky with that. If you can, pick the team you want to work with. People you work with make a huge difference. I've always been kind of lucky with that, but because I thrive on teamwork, I'm less of an individualistic kind of player. pick the team that you can succeed with, that can empower you and you can empower them. Sort of don't be jealous, be a team.
I love that. That's great. A lot of those things remind me of my grandmother too, who said, you know, make haste slowly. And, but, you know, as you say, follow your passion and choosing the people you work with and learning from them and supporting them and, you know, having that very positive team atmosphere is fantastic. Jane, this has been a really interesting discussion. I love all your perspectives on the neobanks and getting into this new market of open banking and banking as a service, and what you're doing with Radar Payments is really, really fantastic. So thank you for sharing your thoughts.
Thanks a lot, Kristy. It was a really great interview as well. I really enjoyed talking to you. Good questions.
Oh, no, my pleasure.
End the day or half an hour of the day.
Indeed. Well, I'm going to thank all of our audience for listening and encourage you all to join us online for this and the other amazing positive payments discussions that we have with women from around the world, women experts and innovators and leaders and rising stars. And Jane is just one of them. So everybody join us, and I look forward to seeing you next time. Thank you.
Goodbye. Thank you.
Thanks, Jane.